operating expense drives the behavior in a manufacturing organization. The three constraint-based management measurement systems are interrelated. And so we will come back to operating expense again. Let me go and take our next measurement, which is investment or inventory. This is the most uniquely defined measurement in constraint-based approach or the throughput world. Investments, as we defined earlier, was all the money that a company spends on purchasing things it intends to sell. Now, one of the main elements of this is raw material. Machinery, plant and everything is something which is more or less bought and kept in its place and cannot be transacted as quickly as raw material. So, in day-to-day decision making, it is the raw material part of this total investment which will be affected by our decision making. If our decision making is good, the effect will be minimal. Let me try and explain. In the throughput world, raw material, WIP and finished goods are costed or are evaluated at the cost of the raw material purchase. In other words, if there is a raw material of 100 kg lying in raw material store, or if the total WIP in the plant is 100 kgs and if the FG is also 100 kgs, the price or the value assigned to these three stages is same, and they are the purchasing value of the raw material. Now this throws up many questions. How can we assign raw material cost value to finished goods or WIP? The difference in value of WIP and FG from the raw material arises in a mind from our current accounting practices, because of the accounting practices, these are given higher values than the raw material and put on our statements of accounts. And so the finished good, which is yet not sold, lying in the company but can be sold at a certain value, is assigned the selling price value. The logic behind is that we have taken raw material, spent some money on it and converted it into finished goods. So this finished good has absorbed a lot of my expenses, and so the value is higher than the raw material. This kind of thinking arises from our accounting practices. But then the same thinking is also making us take a lot of erroneous decisions. Like, if I take raw material, convert it into finished goods, I have increased the performance of my company. And when I mean by performance of the company, I mean only one word: I have increased the profit of the company. On paper and with accounting practices, yes, but in true sense, no. In fact, what you have landed up doing is, you spend some money on it, put it in finished goods, and the customer has not paid you for it. In true sense, the money has not flowed into your company. If you have to look at all this from the throughput world, you can just imagine that you have taken the raw material and put it into finished goods. That is what the accounting practices in throughput world tell us. Isn't it better to leave the raw material in raw material stage? Why are we working hard to convert something into finished good that we cannot sell? This is another big impact the throughput world measurements have on our behavior. This also comes from a current understanding of years of manufacturing experience that if the raw material present in a company is left in its state and only used for manufacturing those items which can be sold, the impact of this raw material inventory is much less on the company performance. The least impact on company performance is caused due to inventory in raw material. The maximum impact on company performance or adverse effect on company performance is caused because of high WIP. And then the third is finished goods. So the priority is the maximum damage to the company performance is caused by WIP, high WIPs. Number 2, finished goods. Number 3, raw material. Let me explain how. If you have finished goods, you can sell them off at discounted price and get money in. Mind you what I am saying. On your balance sheet, there is a lot of asset because you have a lot of finished goods. But in your bank, you don't have money to pay. That is why you decide to sell some of your finished goods and get some cash to pay. Now, since the demand is not very good, you can discount and get and convert finished goods into cash. So, the quickest way to get cash in the company, which is nothing but oxygen, something which you require to survive day to day, you can liquidate finished goods immediately at discounted price. But WIP will take some time. However, if you have the wrong WIP, even converting the wrong WIP into finished good will not get you immediate sale. So WIP reduces the flexibility a company can enjoy in meeting its demand. On top of that, if there is a high WIP, it also impacts the throughput time. Throughput time is nothing but the time it takes for you to convert your raw material into finished goods. So if you realize a high WIP not only forces you to become less flexible, less agile, but it also forces you to consume more time to convert your raw material into finished goods. Matching the demand and delay in supplying are the two big impacts of wrong WIP or high WIP. Let's come down to the raw material part. Raw material part in many industries could be the core or the key to you running your business. That means generating throughput. If you look at certain businesses which rely on natural products like rubber or soya production, they will need to buy as much of raw material as possible at the lowest price, because seasonality or variability can truly impact their throughput. So if these people buy huge amount of raw material, it actually is aiding them to do their business. It does not have a negative impact on their business. And other companies which have, let us say, a lot of common raw material, so if they have an excess raw material, it is just shielding them from outside shock. So raw material has got the least impact on companies' adverse performance. And this is why in throughput world we treat WIP finished goods at the cost of raw material. So if you have got more WIP, you haven't done anything good. In fact, from the point of view, you have not done any work at all. It's the same value. This is going to drive you to make sure that you do not consume your raw material for wrong reasons. Let's talk about investment, which is now machines, buildings, cars, everything. So if you have bought a new car for yourself, your investment goes up, your inventory goes up, and if your throughput doesn't go up, you know this is an imprudent decision making. So investments are now properly looked at. If you buy a machine, yes, the throughput can go up. However, if you take a call on buying a machine because it is more efficient, because it produces more. However, if you buy a machine because now you can produce something faster and more efficient and at low cost, this is not the only driving factor in throughput world. Secondly, the job now, what is being done by the measurement eye is that it's forcing you to constantly keep reducing your investment. And it's also giving you a correct measurement. When I'm asking you to purchase better, to buy only that you need to buy, the figure is not distorted. You can say that I bought 100 kgs of raw material. The moment it gets converted into WIP, the traditional measurements cannot give you a very clear understanding to what was actually bought. Because if you look at WIP is valued much higher than the raw material. So suddenly the value of raw material is no more in value, it is in numbers. WIP would be now measured in numbers, but raw material is measured in value. And again, finished goods is again value. In throughput world, all these things can be viewed or measured with the same parameters. Kgs of raw material, numbers of raw material present. You don't have to convert into any other figure. It is so easy to understand how much of raw material is present within the company. It could be in WIP stage, it could be in finished goods stage. It's very simple now to calculate inventory turnover, right? How much of throughput I have generated by the amount of inventory present. If you want this measurement to just reflect your decision making ability, you just take the value of raw material, right? Inventory turnover suddenly seems to be much better a measurement than anything else, because the old inventory turn measurement gave a distorted figure because you added the value addition and treated it as finished goods, and this was higher. Investment is something that you are supposed to reduce, but only after you have protected the throughput. As I said, in throughput world, we assume that throughput, investments and operating expense are interconnected, and we gave them a priority. First look at increasing throughput, then look at decreasing investment, then look at decreasing operating expense. Let's look at another example. Very often, while in manufacturing organization, we are faced with a deadline, and this deadline is so urgent to be met that we spare nothing. And after having manufactured, we spend huge amount of money to get this item to our customer's doorstep. Many times we have to pay air freight instead of regular transport, but still the company goes ahead and delivers on time. Let's go through the minds of people during this process. Every day in the morning or regular day, the company in the cost world is telling its employees to keep focus on cost and do things while spending less money. Keep the cost down. But suddenly on this particular day, the company is saying, forget the cost, make sure that the customer gets the product. Everybody is confused. We are not even happy delivering this product. Why was it so important that the product went out on time, or the product was delivered to the customer on time? If you did not deliver the product on time, your relationship with the customer would have been hampered, because non-delivery of product reflects on the performance of their company. There are many other people who have delivered the product, and your product could be just one of the many that goes inside the final product of that customer. For him, the cost of you not delivering a product is extremely high. So you know this and you deliver it. For delivering that, you have done 5-6 setup changes. You stopped something which was being made and got this item out of the factory. Then you put it onto a special transport, maybe airlifted it, which cost phenomenally high, maybe 20 times more than what would have been the cost, but you got it there. All along, in the minds of the people, the cost has gone up and I'm not making money, is what is running through the minds of all the employees and people. Let us see how we would take this call in the throughput world. In throughput world, we said throughput is for a period of time. If this money was to be made within the month, I am looking at it, said what is the increase in my operating expense? If this increase in operating expense gets me an increase in throughput, and if this increase in throughput is more than the increase in my operating expense, I'm happy. I could have made more money, but one thing is sure, that I'm not making a loss. Very simply put. Whereas in the cost world, it was not possible for anybody to actually quantify where this action would make them book a loss for this transaction or not. Because everywhere it was negative. The cost of transportation went up, the utilization went down. They were stressed because people were fighting to get this product out. So now we have made one decision simpler. Many times exporters face this problem. Should I airlift it or not? That thing could be answered by this simple equation. In change in throughput, if it is more than the change in operating expense, please go ahead and do it.